you speak it, it kind of holds you accountable to all those people around you. So like that's why I make a point every time somebody asks me that, like, oh, we're going to own $200 million in real estate, right? Because the more times I say it, it holds me accountable to making sure that we do it. And every time I hire a new person or I interview a new person, I'm telling them what the vision is, right? So my job is to fulfill the vision.
Hello, everyone, and welcome to the Moeller Real Estate and Business Podcast. I'm your host, Phil Moeller, and on this podcast, we will be interviewing guests that have made their mark in real estate, in business, and in other areas of life. Listening to podcasts myself has helped me in so many different ways and continues to do so. If you're a real estate investor or an entrepreneur, or aspiring to be either, or just someone that wants to learn, you've come to the right place. An easy way to have an impact is to share this episode with friends or family, provide a review, or just spread the word. We greatly appreciate it, and now let's get to the show. Hello, everyone, and welcome to the Moeller Real Estate and Business Podcast. Very excited for today's guest, Brian Green. Brian, how are you doing today?
Excellent, Phil. Thanks for having me.
Thanks for coming on, Brian. We really appreciate it. I've gotten to know Brian over the last couple of years. Brian is the co-founder of Green Springs Capital, a real estate investment, development, and management group. It has multifamily development projects, short-term rentals, so a mix of real estate. Also thinking about some different ancillary businesses around real estate. I'd love to get into that more. But before we do, Brian, why don't you tell me a little bit about your backstory and kind of how you arrived where you are today?
Sure. So originally in business, right out of college, I started working for a Verizon store. Actually, back then it was paging. And that kind of over 12 years turned into me starting my own chain of Verizon wireless stores all throughout the Northeast. I built it up to somewhere around 23 doors, and then we shrunk back as the industry consolidated down to 15. And then in 2014, I sold off that company to a company from Las Vegas for a good exit. And from there, I started buying small multifamily properties, managing everything myself, kind of just figuring out the real estate business. And so then I built a small portfolio of 20 to 30 units. And then in 2018, my brother came on board and partnered with me. And from there, we've kind of scaled up to somewhere around 25 million in real estate today. We have our own property management company. We have a portfolio of short-term rentals. I think we have 15 to 20 right now. And we do real estate development, including ground up, which is a project we just recently started.
So tell me, I'm curious about the Verizon business and the exit. First of
Mhm.
all, it sounds like that was successful. So let's not talk about real estate for a little bit and talk about just
Okay.
if that Verizon business and kind of scaling that and selling it, what, I guess, was that successful? I'm assuming it was in general. You said a healthy exit.
Mhm.
What was the key to growing it and growing it to a point and setting it up for a successful sale?
To be honest, I was so young that I didn't really know what I was doing until I was doing it. So everything was operations. It was retail. We had a bunch of sales people running around from all these different geographic locations where our stores were. But it was definitely a good business. That was we started our stores prior to like the iPhone and smartphones and all of that coming out. So we kind of hit it right at the right time. Um, it was something where I proved myself to Verizon. They kept funding multiple stores to build onto, and I
Okay.
just kept expanding. Like I never had a thought of selling it. It was just kind of like I'm going to keep growing this and keep increasing our sales. I got to the end, we had $10 million a year in sales. Now it's retail sales, so that's not really your profitability number, but it's we got to a pretty significant size. And then, to be honest, a company came to us to purchase us, without us marketing it, which is kind of the best situation. At first, they wanted us to partner with them, and then I wasn't really interested in that. And then they came back like 6 months later, and they said, "All right, well, what if we just buy you?" So we went through the exercise. They came up with a number, and it was way more than I thought I was going to get for our business, and it just made sense.
Do you think that like you talked about even in your bio and a little bit on your story, like operations, and then you said it here again. I mean, like when you
Mhm.
say operations, like you think you're really good at systems, structure, processes? Is that the way you think, and that's why it was also sellable?
Yeah, I think so. I feel like operations to me is just like knowing like how to structure things, like who do you need to hire, how do you need to price things, like all of the nuts and bolts that our business, I kind of put in that operations bin. And some people I feel like have a good sense of how to handle that and how to learn those skills, and other people never really see it. The guys that don't see it, I feel like, are, to me, the easiest example is like the tradesman that has like a successful business, but he's still doing the work, and like he doesn't really have systems or processes. He doesn't really know. His billing system might be written out on paper still. Like, he doesn't get it. But for me, I always got that part of it. The parts I had to learn were, the stuff that was, about leasing stores and, locations and all that kind of stuff. But once I had the store, I knew how to run the inside of it.
Yeah, I'm a framework. Like I think of frameworks. Like if you can step out of your business, so a lot of people you reference, maybe they don't step out of their business, they're just in it and they're living in it. And the ability to step
Mm-hmm.
out away from it and then see, like, build a framework of how your business and how people within your business and the systems work together, I think is
Mm-hmm.
important. I think that's maybe a skill that some people are natural at, but then can also be improved and developed over time. And it sounds like that was somewhat what you did that made it okay. Now I can hand these people and systems over to this company that acquired you.
Some of it too is just right place, right time, geographic proximity. So the way that business works, like many quasi franchise models, is if they want to get the territory, they basically have to buy the territory, or they have to get, like Verizon, for example, to allow them to build stores like on top of me,
Yep.
which they rarely will do. Like you won't see like a Lexus dealership built on top of another Lexus dealership, but
Sure.
in order to get the market, you have to buy the existing dealership, right? And then you have to have the belief that you can do better in that market than they could. So this company was expanding rapidly. They had 500 stores across the country, and they wanted to buy my market. So the only way to do that was to basically take me out.
Gotcha. So
Yeah.
2018, you exited and you started buying real estate. Sorry, in 2014, you exited and
Yep.
started buying real estate. So like from 14 to 18, even 2014, were you full-time real estate focused and just buying and flipping, buying and holding? How did the real estate start?
Yeah, yeah. So I was buying and holding. I've actually never flipped a house before, strangely enough. I was sitting on the money that I had from the company that we sold, and I wasn't really sure what I was going to do. I knew I had enough, um, probably more than enough, but I knew it wasn't enough to get where I wanted to get lifestyle wise forever. So like I had to figure out some way to turn what I had into more. So I, just started reading, started kind of diving into different options. There was no way I was ever going to go take a corporate job with some other company. I mean, I have all the credentials that would allow me to do that, but there was no way I was going to go to, work 9 to 5, or, work in banking or something like that. So real estate made sense. And then I kind of, reverse engineered the numbers, and, we went into the whole cash flow game. Like how many properties do I need to buy in order to get X amount of income? And I started playing that game, and, came up with the criteria that I wanted, and small multifamilies made sense to me. They were small enough for me to kind of get my arms around. So I started buying 3, 4, 6 unit buildings from the beginning. Quickly figured out that just buying them and passively owning them wasn't really going to net much in return. So quickly transitioned over to BRRRR investing and kind of flipping them back to myself
Yep.
after doing some heavy rehabs so I could recycle the money. But yeah, I mean, once I figured it out, I had a couple deals where I ended up, it was all like a BRRRR that ended up being like, I got back like 150% of the money I had in it. And I had a brand new building, and it was fully rented. And I was like, this is amazing. I'm just going to do this like 100 times.
Right. Yeah. I
Yeah.
similarly, but it sounds like you were in
Yeah.
multifamily, but on single family, when I figured it out or learned the BRRRR method, I think it was on my third or fourth property. It's like, oh, I can do that. Like, I don't just need to use all my capital and keep sinking it into this and wait for the return over a long period of time. I can accelerate this by maybe no money in.
Hmm.
And if you were able to do it with not just no money in, but a big cash out plus cash flow, hopefully on that deal
Yep.
afterwards, that's pretty amazing. So what made you transit? You actually, I want to go back. You also said you started reading and studying. Just tell me more about what that looked like.
So, I had no experience in real estate whatsoever. So when I had my stores, I leased all of my locations. I didn't own any of them. so I was, that's kind of a missed opportunity when you look back on it now, kind of something I should have bought the locations where I had the stores as well instead of just leasing them out. But I didn't really have any experience other than that, negotiating leases with landlords. So, I started reading books. I went through all the bigger pocket stuff, the early stuff, the Brandon Turner wrote. Once I found that podcast, I think I listened to all 300 episodes, literally first one through 300 in a row. So I've got hundreds of hours of listening to podcasts in. I'm an avid reader, so I started reading, not just like I used to read history books, and I was interested in all of that, and completely switched over to real estate, business, mindset, all that kind of stuff was the turning point to where I went. So at this point, I've read, I don't know, hundreds of books, maybe even 1,000, most of them on real estate, and listened to thousands of hours of podcasts.
Yeah. Well, I mean, I'll ask you this later, but I think a lot of times, we talk about with whom you associate, which I think is important, but like you've been spending, as you said, thousands of hours with people on their book or a podcast. And what
Mm-hmm.
I think about reading is you're getting the best information that that person can put together from their set of experiences. So it's not like this is an interview, but it's not summarizing, like it's not packaged in a book, and you didn't like someone didn't take the time and write it all out. Maybe you'll be doing that, by the way. Hopefully you will, and I'll buy the book. Um, but a book is so powerful because it's the best that that person has to offer to other people. So now if you read one book, that's great. But if you read hundreds of books over a period of time, the impact that can have, I think, can be profound.
Yeah, I completely agree. And I'm still old school. I've never listened to a book in my life because I can't digest the content that way. So I can listen to podcasts because to me it's more passive. But when I have a book, I have to read the physical book. I can't even read it on like a screen. So
I ha
I read it. I read it with like a pencil and underline stuff still,
What's
and then
your
I go back through
process?
my
Because I haven't asked anyone else. So it
yeah
sounds like is your
yeah
you underline it? Is like what's this process look like for
yeah.
you?
So I read every single morning. It's the first thing I do. I do not look at my phone. So the first 30 to 60 minutes of every day is me reading by myself. And anything that I find interesting or that's new, like new information, I'll underline it in pencil. And then my process is when I'm done with that book, I usually wait a couple days. Then I go back and I go through and I reread all of my underlines. And then from there, I kind of feel like I digested most of it. If there's any takeaways, I might leave it on my desk for a while and start trying to implement that into my business. Otherwise, it goes on the shelf and I go on to the next one.
Do you go back and revisit the notes from like, oh, that book was great, so I'm gonna reread it, or just go through my notes? I know what I do,
I,
so I take the
I
shortcutted version. So I wonder what you do.
Yeah, so the more I talk to people, the more it seems like there's a lot of value in going back and reading some of these over again. I just never have done it. I'm more of the guy that like when I'm done with it, I've completed it, I check the box, and I kind of want to move on to the next thing.
Uh-huh.
But there are times in conversation like this, or when I'm talking to somebody on my team, or just somebody in life, and I'm like, oh, I remember I read so and so in a book, and then I'll at first I'll forget what book it was because they all kind of blend together. And then when I know which one it is, I'll go back and maybe I'll read a chapter or something like that just so I can reference it. But um, yeah, that's just the way I kind of always done it.
I think it's interesting because if I go back to a book I read, let's say in 2020, 4 years ago or so,
Mhm.
what you underline is just as much the information from the book as it is, I think, a reflection of where you were at and what's impactful to you at the time. So I think for that
Mhm.
reason, by the way, I don't do a good job of going back and rereading. Maybe I'm trying to convince myself to do it right now. But
Yeah,
I'll
yeah.
go back and read my notes, but my notes are based on a prior version of myself, not the current version. So am I missing out by not rereading it, especially if I thought it was an impactful book? By the way, maybe it was an impactful book then and it might not be as much now, or vice versa. So I think there's value, and I think we should both test it out a little bit more. How about that?
All right, sounds good. It's a plan.
So if I go back to your story, so you talked about 2014 to 2018, and then you shifted in 2018. Brother came on board, partnership. What did that kind of build up in the next couple of years look like? Or
Yeah, so we went
even what
from
was the what first of all, sorry to cut you off there. What why did you want to do that at that time? What kind of created the desire to change and shift?
um to be honest, I think it was his idea. He was leaving his career, also coincidentally enough, was in retail, and he owned wireless stores for Sprint. So we had the same business mentor 25 years ago coming out of college. So he went his way, I went my way, and we kind of kind of worked in tandem all along the way. But in 2018, his stores shut down and he did not have the same exit, but he did want to work with me again. So he came on and suggested that we should partner together. And I really wasn't sure how to do that or if I wanted to do that. Ultimately, I decided to do it. We just kind of did it mentally and said, all right, sure, let's split 50-50. There was no strategy to it whatsoever, but we did come up with, we just extrapolated out the cash flow goal, right? Like I had my own goal. I wanted to get X amount. Now Greg's coming on board. So now I guess we got to double it. So that means we got to go faster. So, we went out and bought a 9 unit and then a 20 unit and then another 20 and then another 16. So the building has got bigger because I had his help and because he brought in extra capital. So at this point, we were still self-funding everything. We didn't
Yep.
raise capital at all. So, it just kind of accelerated the learning curve.
And it sounds like it did help accelerate. I mean, did like it accelerated the business because you started buying larger buildings because you felt the need to double,
Mhm.
and you had more capital available, it sounds like, plus capacity. Was that
Yep.
like out of like not to do, like was that out of a need? Like, is that why you're able to scale it because there was a need for it, or because you had the resources?
I think it was probably a little bit of both. Um, I also probably around the same time started to figure out what part of the businesses I don't like. Back then I was still showing apartments, to prospective renters, and I was doing, originally when I first doing this by myself, I literally went out and bought a snowplow for my truck, and I was taking care of all the lawn and mowing the grass,
Yep.
all the things that I thought that a landlord should do. So, by the time Greg came on, I realized what I didn't want to do and what I was good at, what I wasn't good at. So I was able to, he was fine taking over the head of construction and all the maintenance. And I think the scaling allowed us to hire more team members because we had more resources. So we ended up bringing on somebody to start showing apartments. And, today she's our sales coordinator. So she's been with us for 7 years or so. But we wouldn't be able to grow into the scale that we have even at this point if he had not come on and we did not go bigger, which allowed me to stop doing the stuff I didn't like to do.
Yeah. So fast forward to
Yeah.
today. So you guys are, doing a lot of different projects. I mean, you talked about it, but just scaling, you're bringing on investor capital, development projects. I mean, you have a lot going on. What
Mm-hmm.
does your business look like today? What are you most excited about?
So we have a couple things. So we definitely have taken a big jump into development. So prior to let's say the last year or so, we did mostly renovation projects on existing buildings, just heavy value add. So we have our own team of contractors, we have our own network of subs, and that's kind of the same thing over and over again. This current project we that you referenced is the first time we brought on outside equity. First time we're doing ground up development. First time we've had to go through a lengthy 20-month long entitlement process with the city. So we kind of checked all the boxes on this project that we're just beginning now. So I guess you could say that we're focused heavily on that right now since most of our team resources are going there. So we're working on that development side of the business and expanding that and looking at bigger and bigger and more complicated projects, while simultaneously we're also kind of realizing that the cash flow that the rentals are producing is insufficient to meet the kind of income desires that Greg and I both have, and for our team, the salaries that we want to be able to pay them. I don't have the traditional brokerage background that a lot of people have in real estate. I don't have the construction background. So I came into this just thinking that we were going to build up cash flow to get where we want to get to financing wise, but we've recently realized that we need to get into a few other ancillary businesses around real estate. So we're starting to partner with some people to do more and more of that as well. So those are the two things I'm working on: new ground up developments, challenging projects, and these other ancillary services.
I think the cash flow thing, and I think this is honestly probably any business, probably real estate, a lot of different types of businesses. When you do things yourself, you don't have a salary a lot of times, or very limited salary. The cash flow looks great, but I think you hear it on different podcasts and other places on real estate. Underwriting management fees and planning for this stuff, I think, is extremely important. And I think your real estate probably has room for those management fees, but then the amount of cash flow left after maybe isn't where it needs to be. And you're doing a lot of these I think, ancillary services anyway, or you've become maybe experts on these things. So therefore, why not build a business around them? Is that how it kind of evolved?
Yeah, for the most part. So yes, we do charge ourselves a management fee. We have enough for that. The problem was always what's left after that. So, on a spreadsheet, it tells you you're supposed to have X and X amount of dollars left over. And that's you do normally, unless you have capital events or unless you are constantly buying new properties that are sucking up all the cash with other renovations, right?
Yep.
So like right now we have four properties right now under construction. So that basically sucks out all of the extra cash that's in our bank accounts, in lieu of us paying ourselves, which is never going to stop unless we A, stop using our own money, or B, stop buying property, which we've kind of moved into that direction where we're going to start using investor capital instead. But we also need to supplement that with some businesses that have services or fee income.
I think like I made the note growth can consume cash. Like if you're growing at a very fast pace and you're just self-funding it, it can really consume cash. So if you're, just simplify it. If you're flipping and holding, but you have a lot of, okay, let's accelerate and do, 10 flips a quarter instead of 3 flips a quarter. Well, now you have
Mm-hmm.
10 flips active that you have interest payments on, you're paying contractors. There's all kinds of cash that it's consuming in addition just the capital to buy them. So I think
Yep.
just because we know how to do one doesn't mean we know how to do five. And just because we know how to do five doesn't mean we know how to do 20. There's like we're playing each step is a different game that needs to be played, especially on how to manage cash, which I think is so important and quite frankly is the thing that can cause businesses to fail.
Absolutely agree. We're kind of working through that transition right now from being like a self-funded, small boutique kind of real estate firm to an actual legit real estate firm. About a year ago, we hired on a finance specialist, kind of a fractional CFO type, and there was a lot of work to be done to clean up our bookkeeping, and we weren't even charging ourselves a management fee back then. So everything is being organized, so that we can kind of have that as a springboard moving forward, so that we're confident in what we're doing and the underlying financials when we bring on outside capital, which we recently did on this new project.
Can I take a quick tangent? Can you explain to our listeners what a fractional CFO is?
Yeah, so I don't even know if you would like that title, but sure. So basically, what it is to go out and hire a CFO. You might, depending on your market, you're going to be paying I don't know, 100, 200, $250,000 a year in annual salary. So smaller companies like ourselves, obviously we can't afford that, but we still need the skill set. So you can go out and hire a fractional CFO or a fractional CMO for marketing as well, would do the same thing. And you might hire them, for a fifth or a quarter of what their normal annual salary would be, and you get them for a day or two a week, basically.
Yep.
So you're getting their same high level services, but they might work for five different companies simultaneously.
And
Um,
so I have a different buddy that's doing this, and they just brought him on maybe a month or two ago, and he said it's been completely game changing. Not only because this person has CFO experience in I think the corporate world, maybe small business, but
mhm,
now this person is a fractional CFO for 4 to 5 different businesses. So if you imagine like how much you can sharpen your skills by
mhm.
interacting with 4 or 5 different CEOs as the fractional CFO, you're seeing how different businesses do things, what they're doing well, what they're not, and you're able to bring that value and understanding of the numbers and financial strategies to the CEO. Um, are you seeing the benefits of that being structuring and organizing the numbers or financial and business strategy or all the above?
So he wasn't necessarily a traditional CFO. So he came to us. He owns a real estate financial services company, which does a lot
Okay.
of asset management.
Yep.
He does asset management for property developers, with specific focus on construction. And he also sources debt. So he's got great lending relationships.
Okay.
So for us, the biggest benefit is, I originally contracted with him when we started getting into this current project because we had never done anything ground up before. So he helped us run all the numbers and organize what the financials might look like. And from there, it's kind of springboarded forward where now he's in charge of all of our overseeing our bookkeeper, which is kind of the simplistic task. But more importantly, the benefit has been him sourcing debt for our projects, which are almost always complicated in a time right now when financing is not the easiest thing to come by for especially for ground up development. our recent project, we have now we're maybe on our third iteration with three different banks because they keep, kind of stepping up and then falling back, saying that they're not able to perform for whatever reason. So without him, right now, I think that the financing would be the biggest. We'd be stuck in the mud if we didn't have him
And
as far as getting bank financing.
you'd probably be doing a lot of that work trying to figure it out too, right? I mean, it would be so from a time
Yep.
perspective, the value of it to take that off your plate, I'm sure is extremely valuable and allows you to focus on other just different, very high value. Those are high value things he's working on, but
Yep.
it allows you to focus on different types of really high value things. So you
Yep.
talked about ancillary businesses, kind of the just feeding and building of cash flow through those ancillary businesses. I think around real estate,
Mhm.
what are some of those businesses? What does that look like?
Yep. So one example might be, right now we're in our final stages of doing a equity swap with the same fractional CFO. So his company, like I said, is real estate asset management and debt sourcing for commercial projects. So what we actually ended up doing is, it was mutually beneficial where he's wanting to grow his portfolio in real estate, and we're needing more cash flow. So we're doing an equity swap. So a like percentage. So we put a value on his company and then we put a value on our portfolio and then we're just exchanging that. So he's going to be a minority member of our general partnership. And we're going to be a minority owner, although at a pretty significant size of his real estate financial services company. And then we're going to help each other grow, right? So he's going to stay on as our fractional CFO and we're going to be advisoring him on how to scale his business, since, my brother and I have a little bit more experience than he does in building out a team.
So the equity swap, and then you said I think management company as well. Is that right?
The management company is separate. I mean, it's like most management companies, it's not really making money. It's kind of like a neutral proposition.
And that's
So
just you just
he
self-manage, or are you doing third party for other people within your management company?
mostly self managed. We do third party for a few short term rental clients, but
Okay,
nothing long term. Yep. So it's
gotcha.
just in house. So he'll be a part of our basically equates to our general partnership outside of management. So anytime we buy something new or anything that we have in our existing portfolio, he will earn the same percentage.
So it sounds like at some point there was this either aha or mindset shift from real estate cash flow to building ancillary businesses that have more cash flow. I think real estate, I assume, has been phenomenal for equity growth.
Mhm.
However, equity growth doesn't always, you can exercise that equity maybe for cash or cash flow, but you're also building these ancillary businesses to supplement the equity growth with additional cash flow. Was there an aha moment or just a trigger to that, or when did you arrive at that?
To be honest, it's been kind of something that's happened in the last 6, 8 months or so. I think that I have just gotten used to living basically on capital events. So ever since I got in real estate, there was always a refinance or, some of the smaller properties I had, I sold off. So like every year there was, 200,000 here, 300,000 there. And that was plenty enough to kind of provide for the lifestyle I want to live. But then, you get to a certain point and, like how much longer do I want to keep living off of these capital events, these exit events
Yep.
versus just, having a set amount of income that kind of comes in. And then that's exacerbated now when rates are high, right? So it's not as easy to refinance. So that limits your ability to do capital events, at least smart ones, where, you don't want to have to do it right now if you don't need to. So then, we started kind of thinking through that. And then we also, in the last year or so, it's been very difficult to find deals that pencil out. So like our growth on that side of things is not exactly where we want it to be. So that's when we started kind of brainstorming for other avenues.
That makes sense. So if you went
Yep.
back because of that lesson or just kind of aha, whatever it is, or the last 6 to 8 months, would you do things differently 2, 3, 5 years ago? Or you like the position you're in, you just have to shift? Like, what if you set up the real estate portfolio a little bit different at that time and maybe taken a little bit a different path?
Um, I do think that, I mean, I don't know, there's pros and cons both ways. I think we learned a lot and we got to a significant size self-funding everything, but there's probably an argument that says that we could have started bringing on outside equity sooner and preserving our own capital. So then we would have more in reserve. So that way, when you get to times like this and there's no capital events, you just use your reserves, right?
Yep.
Instead, we poured everything into it. I've got a friend of mine that calls it, basically redlining. So like that means you're constantly throwing all your money back into properties, which is great. You're making
Yeah.
tons of equity and your net worth is going up, but you have no cash.
Yeah.
So I think that there's probably an argument he said that maybe it was sooner than we did. We could have brought on outside money. Um, I've always been resistant to the services businesses, though. In this regard that we talked about with financial services, I'm not going to be the lead guy on that. I'm not going to be the guy going out finding new business. People, I'm a broker too, but I've never practiced in a retail fashion because I've never desired to work in that field. So like, I don't want to do something that I'm not into, like, or that doesn't interest me just to do it for money.
Yeah.
So I don't know if I would have done that because that's what most people do. I think the easiest would have been just to bring on capital sooner.
Yeah. The other thing I thought about as you were talking about it is if you had just it, so in Rich Dad Poor Dad, right? Kiyosaki talks about cash flowing assets. And I think
Mm-hmm.
it's so important to recognize the importance of that because there's both cash flow and then the assets that hold equity. If you have just cash flow, but not like if you had just cash flow, that's good, but you wouldn't have the balance sheet that you do. However, if you just had
Mm-hmm.
equity and no cash flow, which you've kind of been leveraging, but you still have cash flow to build up your team and put yourself in a position now to bring on investors. I think it's why just the cash flow plus the equity, like they're both important. And I think for your lifestyle, for your personality, for the market you're in, for your like it's just I think it's important to understand what is your strategy. Is it cash flow? Is it equity? And then have the right real estate strategy to support your financial strategy for the person individually. Does that make sense?
It does, yeah. And at this point, if you had to ask me what I care more about, it's equity. So I want to build out these separate businesses that have, they generate cash flow because they're businesses. But when I look at a piece of real estate, the first thing I look at is like I'm looking at it 5 years, 10 years. What is the chunk of return we're going to get on this? Is it
Right.
worth our time? Right.
In
So that
total
quickly
equity
what's
dollars, right? Is
yeah,
it
yeah,
worth
yeah.
your
Yep.
time and effort in total equity dollars that you can grow?
Right. So if we're in it for 10 years, are we going to make $1 million or not?
Right.
If it says 150 on there, then it's not worth it. Like
Right.
it's not even worth the time.
Right.
So now, we have to look at, hey, how much are we going to make? But we also have to worry about primarily how much are our investors going to make, right? Because if our investors aren't making a certain amount that's attractive, then they're not going to want to invest in the deal and the whole thing doesn't work. So,
So the most commonly known way to look at an investment is like return on investment, ROI.
mhm.
Are you measuring return on time? I mean, you basically said like return, is it worth the effort? How should people think about that? Is this worth my time and effort? What is my return on
Yeah.
time?
That's funny. I just had this conversation with my brother yesterday. So we were talking about two different hypothetical deals that we're analyzing. One is like a stabilized property that's a late value add, and it won't take a whole lot of effort, so it's going to make a lower return, but it's probably still worth doing. And then the other one is a monstrosity of a reclamation project and like a downtown city block that's going to like basically take all of our time and effort for the next 2 years probably, but the payout is 3, 4 times as much. So what we determined were both are important, both are probably worth doing. But we just have to realize that one is going to take a whole lot more of our time than the other one. And there's a place for each of those kind of in our portfolio. But what you don't want to do is have the reclamation project that's going to make you the same return as the stable 20 unit that we're looking at, right? You just
Right.
got to make sure that the return is worth the risk and the time.
Yeah.
They have to be equivalent.
And I think I wrote down, says you're saying that, like when you're first looking at a deal, so I'm going to talk about when you're
Mhm.
first looking at a deal and then when you already have a piece of real estate, the metrics someone might think about. So when you're first looking at a deal, you're going to look at return on investment, return on your time, effort, mind share, whatever that is, and then
Mhm.
also the risk associated with that. I think those three things are kind of the general guidance. The only thing that changed, I think, so now you have a property that you've had for 3 years. I think
Mhm.
the main change is instead of return on investment, what is my continuing return on equity? Because if you have a
Yep.
ton of equity in a deal and it's really low cash flow, you can maybe exercise that equity and go put it into something else that has a higher return. Or if it's a pain in the you know what property that just sucks to manage, you might say,
Mhm.
hey, it's a very low return on my mind share and time. So that might be a reason to sell it.
Yep.
If that property continues to have risk or it's just there's a reason, risk with the market, whatever it might be, maybe that would be another reason you might sell it. But I think in general, return on the money, return on mind share, and then the risk are kind of three metrics that you should be thinking about throughout a property's life cycle to determine whether to buy it in the first place and then whether to divest it. Does that resonate with you?
It does for me. And notice that you didn't say, cash on cash return or any of those things that people talk about, right?
Right.
So, I mean, that's something that's on our spreadsheet, but like we barely pay attention to it anymore.
Well,
It's
but
really,
you did at
it's
the
an
time,
we did it when we first started, right?
right?
Because that was the goal. The goal was to kind of get enough cash flow that paid for or what we were, our income or whatever.
No,
But now we're at a
100%.
different point. We're not now we're looking at like, hey, what's the equity multiple? Like, is this recourse or non-recourse debt that we're gonna have to put on this? Bigger type of questions.
I want to shift gears and talk about like goals and alignment of strategy because I think I wasn't planning on this, but I'm curious what your approach is because your first goal was, I think, to have enough cash flow to live off of. And therefore, you were looking specifically like your main focus at that time was cash on cash return. And I think for younger or earlier in their investing career
Yep.
investors, they might be looking at cash on cash if their goal is to build enough cash flow to leave a job or do this full time or whatever it might be. Whereas other people, they might love what they do and they just want to compound their wealth over time. So they should be looking at equity multiples, return on equity, things like that. But how do
Mhm.
you align? Like, how do you take from a lifestyle and what you want perspective? How do you cascade that to your real estate goals?
I think that for me, I kind of project out based on where we are today. So like I'll say, hey, listen, we've got 25 million in real estate, and I know that if everything was stable would pay us, this amount in management fees and this amount in salary and this much in cash flow. So if I want to increase my personal salary and or the salary of my executive team to a certain level, like if I want to get each of them up to 250K a year or $500,000 a year, then you can multiply out that portfolio size and say, all right, well, how big do we need to be to get there? So, we've kind of done that math, and 200 million is the number. That's the number we're trying to get to for a real estate portfolio size. Um, that might, these numbers are not hard and fixed because, who know, 200 million in real estate might produce something in this market and something else in this other market, right? But roughly speaking, given our current business model and our market that we act in, if we get to that size, we will be able to basically have a executive team that's all making well over $250,000 a year, and principals that are making well over $1 million a year, and we'll have all these investors that will be realizing the returns on our real estate properties and the tax savings that they wouldn't be able to get otherwise without working with us. So that's kind of it's all working in tandem, but that's the sum that we need to get to.
When did you shift from your own cash flow and income, which I know I'm not saying you're not worried about that, but to
Mhm.
others and your team members, like when did that shift start to happen for you?
We operate on EOS, which is a longer conversation. But when we first started that, you kind of have to go through like your VTO, right? You kind of write
Yep.
down like why you're doing what you're doing, or whatever.
Yep.
And we had this for the first year or so. We had this slogan on there. It was basically, to make exceptional, provide exceptional homes to exceptional people, right? Something you'd see on like a Hallmark card. And then, sometime in the last year, we just kind of always said, this is BS. Like, this is not why we're doing this. Like, we're doing this for money. Like, but it's not just money for us. Like, I want to be able to have a platform that allows my friends and family that are not real estate experts to prosper from what we're doing, right? I want to give them an avenue to get something more than just putting it in an index fund or not knowing what to do with their cash. And same thing with our executive team, right? Like, the person that's the Kristen, who's our sales coordinator right now, when I hired her, she was a stay-at-home mom who used to be a teacher in middle school, right? She was a math teacher, but she started showing apartments, and then she became our leasing coordinator, and now she's running our sales division, and she's getting a percentage of our GP on every new deal, right? So I think it'd be phenomenal if, like, in the next 5 years, she's making 300,000 a year or 500, and she has a portfolio value of over $1 million. Like, if I can do that for 5 people all across our executive team, I think that would be amazing. And to the same extent, if each of those people has like their own ancillary real estate business that we can kind of partner on and they can build up their own thing while they're working within our company, I think that would be even better. I think one of our core values is entrepreneurship. So I'm trying to encourage those people that are on that team now, um, that they have the opportunity to build alongside of us their own kind of channel. So we're doing it with our financial guy on his real estate services. We've got project coordinator that runs our construction sites that we're entertaining building out our own spinoff on doing flips, and we want to do a profit share with her. So I feel like if we have all these ancillary businesses with our executive team as partners, and they're also all making an enormous salary that they wouldn't have otherwise, I mean, I think that in the end, that'd be phenomenal. Like, how many people does that affect when you're paying all those people those high salaries and have your investors that are making tens of thousands of dollars? That extrapolates out to a huge community.
Yeah, all of a sudden you can have a big impact on a lot of different people, both financially, but
Mhm.
also, in my opinion, like your mindset, like that will cascade too. So even though, like, hey, yeah, we want to help these different people make money, and it's really cool to see how you've transitioned from, okay, how do I have enough cash flow to be able to live off of, to how do I build up my executive team to make money, not just to live off, but of to live off of, but to build equity and live very
Mhm.
well off of. And then they can also choose, do we keep that money? Do we give it away? Right? There's all kinds of good things that could happen from that. And then you add on the investors too. I think it's a neat story, and congratulations for kind of making that mindset shift. I want to shift gears a little bit here because you have a very important appointment here in a few minutes. You got to pick up your daughter, Brian. I didn't say this, but three young daughters, and his wife is out of town. So he is the man in charge. So you cannot miss picking up your daughter. So,
Yeah,
uh,
no, I'll be in
but
big trouble.
throughout the process,
Uh,
if you really, I guess, if you really step back and reflect, how does what you have done and what you're doing make you feel?
um, that's an interesting question. Nobody's ever asked me that. I think it makes me feel um, a great deal. It feels very rewarding to do what we're doing. I don't know. I try to have a great deal of gratitude about what we've accomplished and what we are capable of accomplishing. But I also feel a responsibility to kind of see it through to the end. I feel like we put all the time in and taken all the reps at the lower level, that we owe it to ourselves to kind of reach out to get to that higher level. Because, if we can do it, like I said before, it helps everyone that's in our world and in our circumference. And I think if we don't do it, then, it's wasted potential and it's wasted opportunity. So I think for the most part, it's a responsibility. Because to be honest, we could just sell everything we have and we'd have enough money to be fine for probably forever.
Right.
But that seems like a waste to me. Like, I've got too much more to do. I've got too much capability, too many opportunities to help too many other people that are working with us. So, that's kind of where I'm at.
Yeah, I think I like the word responsibility. I mean, what comes to mind is to whom much is given, much is required. And maybe that responsibility might feel heavy sometimes, but man, with the group you talked about, your executive team investors, like you can have a great impact on a lot of different people, both financially and again, by them being around you, you're a good dude. I know that you're going to make them better people in other ways other than just money. So I think that's really neat. I want to shift to a couple of closing questions. So, what do you think has been your key factor to success?
Um, Key factor. Well, I could easily take discipline since I have a tremendous amount of that. But I think more importantly in real estate, it's persistence. I think it's like a business that is completely unforgiving and you're kind of operating on your own on an island. And, there's challenges like left and right, whether it's with tenants or with the city or with banks or with whoever is interacting with you. And if you don't have the persistence to kind of push through all those barricades, then like you will fail or stop very early on. And I think that most people would not push through those things, especially working by themselves. Like, it's a very lonely business. So like
Uh-huh.
most of the times, I mean, my brother's my partner now, but even now I kind of operate much of it because he's running construction sites. So I'm kind of on an island. He's on an island. So it's a lonely business, and you kind of have to just say, like, there's no way I'm not doing this. Like, well, there's some way to do this. We're going to figure it out, and you just keep pushing through. And your persistence about it is kind of what gets you where you need to go.
I mean, you kind of referenced traction in BTO, but is clarity on what
Mhm.
you want, why you want it, where you're going, an important piece of allowing, like, keeping you persistent? Do they go hand in hand?
I think so because once you speak it, it kind of holds you accountable to all those people around you. So like that's why I make a point every time somebody asks me that, like, oh, we're going to own $200 million in real estate, right? Because the more times I say it, holds me accountable to making sure that we do it. And every time I hire a new person or I interview a new person, I'm telling them what the vision is, right? So my job is to fulfill the vision. So like the more that we can kind of communicate it to as many people as possible, it just further holds me accountable and forces me to kind of do the things that I don't want to do sometimes.
So persistence, and then you mentioned discipline, but you didn't. But I didn't say for the listeners. Brian is like, I mean, he called himself. I won't say what you said before the call, like something about handsome, but I would say extremely fit. What is your key lift you do? Like you deadlift? Is that the or power cleans? What is like the
Yeah,
crazy numbers?
I'm a CrossFit guy, so yeah, it's cleans, it's snatches, squats, deadlifts, all that kind of stuff.
So give me a number. Like, what's your most impressive? You're humble, so I'm pulling this out of you. But what's your most
Yeah, right.
impressive, like
It's
snatch or
probably
power clean or whatever?
the one I like doing the most is squat snatch, and my most I've ever done is 245, which is it's a very technical. It's the most technical lift. So like it takes a great deal of like strength and skill, like form wise, to get there. Um, but I think that's my favorite exercise, and that's I'm trying to get to 250. 250 sounds so much better than 245. So
Well,
that's
we
where I'm
could
going to
have a
try to get
whole
to.
we could have a whole separate call on health and other things with Brian because he's extremely
Yeah.
fit and extremely healthy. Actually, and we won't go there. We could go down traction, EOS, health, a lot of different topics, but we have to get you to
Yep.
your appointment, so I won't do that to you. Um, you referenced reading, so this
Mhm.
hundreds of books. Of all those books, most impactful business or real estate book?
Most impactful because we've actually implemented is probably Traction, the EOS book. Although I'll admit the first time I read it, I was like, this is garbage. I don't even understand what he's talking about. And then we had to go back through it again. And then we tried to self-implement and that didn't work. And we hired out. The system works though. I think they got us organized, especially since my brother, as I said, is my partner. So sometimes that family business gets a little sticky when you get like relationships that are kind of battling.
Yep.
So to have a formalized structure, and sometimes you have an implementer come in, it's kind of like having a counseling session with your business partner. So I joke that our implementer is more of like a marriage counselor. But I think from an impact perspective, that's the one. There's a lot of other mindset books and real estate books that are important too, but EOS was the one that we actually implemented 100%.
Well, personal development book. So your most impactful personal development book, whether that's mindset or something else, what stands out to you?
Yeah, I like I just read this last year, The Wealthy Gardener.
Okay.
Um, it's a book full of like, it's a fairly long book, 400 or 500 pages, but it's like the whole thing is written like a parable. So it's the author is writing life lessons. I believe it was to his son, but he's doing it in story format. And when I
Okay.
read the book, I was like, this book is incredible. Like I've recommended it to like a numerous other people and they all love it. But it's kind of like the book that I would have written or I wish I could have written because it's all the same lessons that I think to myself, but I don't know how
Okay.
to translate into words. It's a fantastic read though. If you haven't read it, I highly recommend that.
Well, for the listeners, I mean that says a lot right there. So I've heard that before. And then you said you read everything and you don't listen to Audible, but I'm now blending them
Mhm.
a little bit more. So you don't know, you're saying read it, don't listen to it on Audible, right?
Well, for me, I mean, if you're able to digest it in audio format, I'm sure that's fine.
I don't think I get as much out of the Audible, but maybe
Yeah.
it's a volume thing for me too. So The Wealthy Gardener, I love it. Brian, how can people find out more about you?
They can find us on socials. We're at Green Springs Capital on Instagram. They can visit us on our website. We've got our property management company, SaratogaStays.com, and then we have our investor portal in GreenspringsCapitalGroup.com. Or they can send me an email. I'm open to talking real estate with anybody anytime. It's Brian at GreenspringsCapitalGroup.com.
Awesome, Brian. Thanks so much for coming on the show. We need to get you to you're picking up your daughter here in 4 minutes. I need to keep you on task. But Brian, we really appreciate it for the Moeller Real Estate
Yes.
and Business Podcast. We're
Yeah.
signing off. Thank you for listening to the Moeller Real Estate and Business Podcast. We hope you found today's episode helpful. If you know current or aspiring investors or entrepreneurs or anyone that would benefit from today's episode, we appreciate you sharing it with them, or better yet, providing us a 5-star review. To learn more about Moeller Real Estate, visit our website at www.moellerre.com. You can also sign up for our newsletter or local events via our website. In closing, I encourage you to be purposeful in all areas of life, educate yourself, network with others that have been successful, take action, and lead. Thank you.